Hey everyone, me Kevin here. Oh my goodness, the S&P 500 appears to be pricing in a correction, and I want to show you exactly what I'm seeing. This is just one part, but I want to break this to you right away. We talked about this this morning in the private course member live stream. This is the stuff that we often talk about, little things I'm seeing in the market, but this is just one that's a little bit larger that I really just want to put out there. We did also talk about a really special tax strategy, totally legal tax strategy, that I'm thinking about using to take advantage of playing this particular market, and if we get a special crash, what special things I might be able to do. Stay tuned. Maybe I'll make a video on that, maybe not, but either way, it was in this morning's live stream. It's great. But anyway, use that coupon code down below. But folks, let's jump into what the heck is going on here, because take a look at this, folks, okay? So the S&P 500 is down 1.75%. Last week and over the last 2 weeks, I've been talking about how I think there could be a large correction coming in the S&P 500. I talked about it yesterday, I talked about it last week, I talked about it 2 weeks ago. There's no secret here. The S&P 500 was hitting all-time highs over and over and over again, while at the same time tech was dropping. Tech cannot drop so far without at some point pulling the S&P 500 down like a rubber band. It pulls it down. It constrains the Macy's and the Nordstrom. Tech and consumer discretionaries pull these guys down. And what happens when they all get pulled down, including potentially even crypto, which might explain why we're seeing crypto sell down today. In my opinion, you get to a potential new low in the market. So let's say that new low is, I don't know, S&P 3200 instead of 4200 all-time high. We go down, 20-ish%, whatever, 1,000 points, 25%, whatever. We go down to S&P 3200 and somewhere around there, we get this new low level, and then we start looking at, okay, what are the deals now? Is it tech? Is it recovery? Do we still believe that recovery that might be high in debt is going to recover as well as tech is going to zoom out of this? When that recovery starts, we're expecting to see inflation data not do vertical increases, but instead to start doing flattenings and rotation towards the downside of inflation. I know that sounds crazy to think about right now because everything's going vertical with inflation and inflation expectations, but inflation expectations change at the drop of a hat. All you need are a few reports in a row of, oh, inflation is slowing, it's slowing, oh, supply chain shortages are changing, inflation expectations flip-flop. And it's possible that we could correct down to the downside substantially, especially with all the shorting going on. The shorts are printing money right now. And we hit a bottom, and we start seeing the sectors come up the way they may. Now, how they will come up, I don't know. I'm hoping it's tech and consumer discretionaries, because that's what I'm heavy on. The Etsy's, the Enphase, the Palantirs, the Tesla, let's go, right? These are the ones I'm heavy on, is what it is. I have to suffer through the red. I don't like shorting, because I take all the money I would spend on shorting and just throw it into the market. It's just my strategy. It's just the way I work. I don't try to time my exits with shorts, and I like doing what I'm good at. And in my opinion, this is what I'm good at: is buy the dip. I get made fun of like crazy on the way down, and then when it goes zooming, everybody's like, "No, they just got lucky." What frickin' ever. But here's what I'm seeing in the S&P 500. Okay, you ready for this? Take a look at this. Usually when the S&P 500 goes down a couple percent, you see put options, especially long-dated put options, move maybe 2 to 3x. So maybe you'd see put pricing go up 4%, 6%, right? Let's go to the short ones. Let's go to like the summer, okay? Let's go to July. Look at the put pricing. Oh my gosh, it's gotten worse since this morning. Look at the put pricing under some of the higher interest, higher open interest options here. Oh my gosh. We were just looking at these an hour and a half ago, and the put pricing was up 40% on the S&P. It's up 60% now. Puts are pricing in a fat freaking correction right now, folks. A fat correction is getting priced in. But it's not just those, folks. Take a look at this. Go out to like January of 2022. Look at the put pricing. Let's try to find one that has a higher open interest. Here's a put at 115 for the SPY. This is up 35%. You've got, let's go to like, I don't know, SPY 300, you're up 20%. SPY 305 with the 10,000 open interest, you're at 48%. Here's one that's up 20%, 28%. You're seeing massive increases in put pricing. Certainly the shorter you go. I mean, if you went to like, I don't know, the end of May or something like that, some of these puts are up 100%. The pricing has doubled on these. The market is all of a sudden pricing in some massive fear and massive potential for a correction. And so literally what you're seeing this morning is people freaking out fleeing essentially to the exits, going, we gotta hedge, 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 hedge. We gotta hedge, we gotta hedge, we gotta hedge. Problem with hedging too much is you don't end up buying the dip. The theory is, okay, this is in the perfect world scenario. Perfect world, like fairy tale, you're the best timer of the world. Fairy tale is you buy puts, you wait for the bottom. When you're confident you're at the bottom and you don't think we're in a bull trap and things are going back up and you don't miss the bottom, you rotate from the puts to buying at the bottom. If you can pull that off, do it. I think that's great. The alerts that I'm going to be sending out are going to be my big buys as we get closer to where I think I'm going to go back in on margin and go heavier and maybe use this tax strategy I've been talking about with my course members, which tax strategy, by the way, totally legal. I talked about it this morning in the private live stream. I'm really tempted to do something big here and go for big time shopping when we hit a bottom within potentially. I still think probably the next 2 months is when sometime between now and the next 2 months, that's when we hit some kind of bottom. And as long as that inflation data starts inflecting back down, which I think is 70 to 80% likely, boom, that's when we actually start seeing the roaring 20s again. But otherwise, we got this fear of hyperinflation, overinflating, lots of fears in the marketplace right now. And you see it in the puts, folks. I talked about this 10 days ago. I talked about this a week ago. I talked about this yesterday. I see an S&P 500 correction coming. Folks, the indices are now starting to correct. I hope it doesn't last. I hope it goes away. I want people to make money going on the upside. I don't know when it's going to rotate, but it wouldn't surprise me to see this continued trend down for the next 2 months, maybe even a little bit longer. But like I always say, I think we're stuck in this through at least September and October. I do think we'll start getting lots of U-turns in September and October, and then longer tail inflation risks and expectations will still take probably through December and maybe even the beginning of next year to actually really flatten out again. We'll see. We'll see. Inflation right now, through the freaking roof, and there's no questioning that. But I have to say, it's also odd to see inflation expectations go through the roof and to see Bitcoin and crypto sell off. It's odd. Bitcoin's at 55,000, it's bouncing around the bottom right now of about 54,600 for the day, and 55,000. Ethereum's down from 4,300 to 4,154, and you've got Dogecoin sitting around 46 cents. Things to pay attention to, but right now, the cryptos, a lot of these, at least the big ones here, they're moving along with the S&P 500. So be careful, stay safe out there. If you can pull off the timing and you can short, just realize, even though that might seem like a perfect idea, right now you're already paying a fat premium. If you want to pull off those kind of shorts, you're probably better off hoping that tomorrow's a green day and that people's fears chillax a little bit, and then maybe you buy some puts. Anyway, thank you so very much for watching. Check out the briefly extended coupon code down below for the amazing programs on building your wealth. You can learn my tax strategy in there as well that I talked about this morning. And folks, we'll see you in the next video.